So our next guest is the co-CEO of Blue Owl Capital, oversees more than $250 billion in assets under management, key player in the race to fund the surging energy demand for artificial intelligence. Blue Owl is funding the development of a data center in Abilene, Texas, which is the first site of the Stargate project. Joining us right now is Marc Lipschultz, co-CEO of Blue Owl Capital. Good morning. How did you get involved in this?
Good morning and happy birthday.
Thank you,
sir. I feel very privileged to be here on a special day.
I'm glad you got a donut.
And I got a donut out of it, which is delicious.
By the way.
It's his birthday, but you get the donut.
I know.
That's
what
weird.
a privilege.
Yeah,
it's a winner for me.
So how did this happen?
So, look, we got involved in data centers the way we have at Blue Owl in many cases, sort of from the bottom up, which is, first of all, Blue Owl, we're about investment strategies within the land of risk-bearing strategies that are about downside protection, stability, income orientation, and we have the largest triple net lease real estate business, right, where we already worked with people like Amazon on distribution centers. So when we saw this emerging opportunity, which really is a type of triple net lease, which is our home base, a space we've pioneered, it's really a deep vertical version, which is you're going to be a long-term partner to these very strong investment-grade companies. So, that really inspired our interest. We started doing some of that work within our real estate business and then said, like we have in other areas, if we really want to be serious about this and deliver the best results, then we need the best people and the best team. So we acquired this business, IPI, who have been a real pioneer in this arena.
And then they got in touch with Sam Altman. How did this all happen?
Yeah, so then through a combination of work we'd been doing with Oracle, and then, of course, Oracle's subsequent partnership with OpenAI. And, so that really brought us all together. So we actually are the capital partner in the Abilene Center, as an example.
So there is a little concern in the marketplace right now about data centers. This whole sort of DeepSeek situation sort of raised this question of if, in fact, AI can be produced with a lot less power and maybe even smaller data centers or maybe not as many growing in the future, what's going to happen here? And also just sort of how these things get amortized over time. Do they have to actually get refitted or retrofitted later? Because some of it's about training, some of it's about inference. I mean, there are these sort of big questions. And I'd say the biggest sort of cloud question is, are we in 1999 laying down, fiber, right? And whether there's an overbuild going on.
So that's a really interesting framing and a really good set of questions. So let me come at that from a few perspectives. So first of all, the way we at Blue Owl approach this, again, which I think is very much the DNA of our firm, we build data centers in partnership with the hyperscalers under contract.
Right.
So the question for us isn't really what is the exact utilization rate. It's does Microsoft, does Amazon, does Meta, Google, there's five, right, along with Oracle that are building these big data centers. We sign 15-year agreements with them. So our question really is, do they believe in the future of, and we've certainly seen them, in fact, raise their capital plans on the back of DeepSeek. So I think from where we come at it, we have the pick and shovel solution that is really counterparty to investment grade, near sovereign quality credit. So we love what we're doing. That doesn't make every data center a great idea, because to your point, if you're building spec data centers, hoping someone comes along and uses it, that starts to have some of those fiber questions you're noting. So I actually like the analog to 99 for what it's worth, both the good and the bad of that statement. At the end of the day, the transformative effects of the internet were spot on, right? In 99, the mania wasn't wrong about the transformation that was coming. What was wrong about was picking the winners and losers around, so to speak, the cutting edge. We stay away from that. I don't know if DeepSeek's model is or isn't superior. Clearly, there are things being done with distillation learning or reinforcement learning that work. That's part of the advancement.
But what happens at the end of the 15-year?
Well, so 15 years, then, of course, you have, in fact, a functional, well-developed data center. I mean, what is a data center? The outside of a data center is just a really sophisticated version of a warehouse. Inside the data center. Now, that's where, to your point about capital, that takes constant capital refreshment. That's not our part of the business. That's actually the part of the business, the brain of the operation, that the hyperscalers, the operators themselves are refreshing. It's really interesting. The inside of a data center is about triple the capital of what it costs to build, if you will, the physical structure of the data center. Billions inside of a data center. So they have to keep refreshing.
When you look at the broader, maybe we just do public REITs that are involved in what you do or involved in this space, Do you say all these guys are going to win? Do you think that there's going to be a lot of losers here? What do you make of it?
There'll be winners and losers because the word data centers, of course, is being applied as liberally as possible now by anyone that's involved. And all of a sudden, everyone's portfolios, mysteriously transform into lots of data centers. That seems to always be the flavor. So there'll be winners and losers. But if you have long-term agreements with people with investment-grade ratings, I'm confident in being one of the winners. But there'll be people with spec centers. And by the way, in these REITs, if you have 10% data centers, why would you invest in that to get data centers? If you want to invest in data centers, then you got to find a way to really have that exposure.
If I ask you about what you use, will you say all of the above for energy sources? Is that what you'll say?
Yes. I mean, the amount of energy we need.
All you guys say the same thing, but...
Well, what that means
fossil fuel.
Well, what it means practically speaking is...
Go ahead.
Well, I mean, in a perfect world, it would be the redevelopment of nuclear capabilities. But
you don't have that. You don't have that.
We don't have it today.
They're shutting down solar, and they don't know what to do with all... They've ruined an entire acres of land that they can't even get rid of those horrible solar panels.
Look, solar is part of it, wind is part of it. But natural gas-fired generation is obviously a large part of it.
It's part of it? When you say, I'm going to be honest. I know.
I'm saying a large...
Okay, how much is fossil gas-fired? How much is fossil fuels?
Fossil fuels are going to be a more reliable, dispatchable source.
A percentage of what you're doing, how much of it?
Well, of course, we're not actually doing the power ourselves.
I know, but
it's a huge part of our... It's somewhere between... coal, which is on the decline, and gas are the majority, as you know, of all the power in the U.S.
Right.
Gas preponderance.
Yeah,
that's just a fact.
Everybody says all the above, and then they give the woke nod to solar and wind, but it's still fossil fuels.
Natural gas is likely to be the predictable,
for the next 50 years
for a while.
Yeah, because this is the world we've built.
Yeah, now we're not on the power production side, but we're utilizing it. We need the power to do what we do. That's true.
That's where you're getting.
All right.